this is a left shoulder, another left shoulder. This is the head. Okay, there's also another right shoulder here, right shoulder, right shoulder. This market may also form another right shoulder. Hello guys, welcome to my top-down analysis on the euro market. So in today's episode, I will share with you my trading setup, what I'm looking at on the European market, and how we are going to possibly find a set trade, what is happening at the overall trend of the market, and how you can find entry and exit. The euro market has been very quiet for most a year right now. From higher time frame, you see that clearly. You can see this tight consolidation. So the market has been quiet after this strong bearish drop to the downside, after forming this double top trend bearish reversal pattern. So this is what caused this massive drop to the downside. So currently the market has pulled back into the resistance area that happens to be this neckline, this yellow bar. Market has been consolidating along that line and along that region, and if you also use Feb retracement from swing low to swing high, you can clearly see the market is trading at the 50 Feb retracement region. So after this impulse leg, the market has retraced before making the second impulse leg. So if the market retrace, and if the market want to make this second impulse leg, it must be the same distance from this swing high to this swing low. Okay, using the Feb retracement strategy. You know what I'm saying? So yeah, so we are still at the neckline, and what is also holding this market for not breaking down to this 0.9 region is this key support level of 0.5. Is this key support level of 1.05. So I will actually be looking for a short position along this region that is serving as a key resistance area. So I will just move down to a lower time frame, so my entry time frame, to be looking for a short position only on this euro market, on the USD market. I dropped my analysis on that USD market. Go watch it. Was it last week? Dropped the analysis on USD. Today is NFP. Today is NFP, right? So we might see a retracement back into this region. At this region, I will look for a short position. My stop losses will be above this previous high. My take profit will be at, well, first target will be at 1.05, a round up number of 1.05. This is a clear case of a higher high, a lower low, a higher high, a lower low. We might see another higher high before this market collapse to the downside. Alright, so from price action, this is what is currently happening on the market. So I will just wait for another higher high into this resistance or a third touch on this trend line to find entry. And we all know that the third touch of a trend line always tends to send that market to the downside, knowing the overall trend is bearish. Okay, so on my lower time frame, 4 hours time frame, I'll be looking for a short position at this region. First target will be 0.5. Once we take that out, overall target will be 0. There is a multiple head and shoulder pattern that is formed on this neckline. Okay, this head and shoulder pattern, they might not appear the same way you see them on your textbooks. All right, price action will just train your eyes to spot these different trading and reversal trading patterns. All right, so it's very important as a price action trader, you know when a trend is about to start and when a trend is coming to an end. This is what this pattern does for you. They signal a possible reversal of trend, whether bullish or bearish trend. So knowing when to trade them, knowing how to trade them, knowing how to identify them is a very good thing for you as a price action trader, because you don't want to be trading against the trend. Okay, yeah, this is a left shoulder, another left shoulder, this is the head. Okay, there's also another right shoulder here, right shoulder, right shoulder. This market may also form another right shoulder. So if that happens, that means this support will now also serve as a neckline to this weekly head and shoulder pattern. Okay, so on a monthly time frame, there is double top double top reversal pattern that is formed. And then on a weekly time frame that happens to be the neckline, there is also head and shoulder pattern that is also being formed. So when this support is broken, that happens to be the neckline of this weekly reversal trend pattern, that means the next area for this trade is this key zone of 0.9. Now you have to know that when these patterns are formed on a higher time frame, they tend to be respected more than the ones that are formed on a lower time frame. So all these higher time frame patterns, they are more respected than the pattern that are formed on a lower time frame. So yeah, that's why you always have to move to a higher time frame to get the overall trend, to know what is happening, to determine your trading decision. So yeah, that is it for the Australian market, and for the European market. This is what is happening, and don't forget to like this video, subscribe, so that you will not miss out of this trading setup that I drop every weekend.